It seems like the big headline should be Rio Tinto and Glencore merger fails. Like I've been thinking to myself for the last month since it was disclosed, the merger that nobody asked for, and honestly, nobody was talking about. For the two conferences I went to in Vancouver a couple of weeks ago, nobody was talking about it. Nobody was excited about it. Everybody was talking about gold and silver. And that in itself, I've been to conferences before where I believe there was rumors of a Barrick-Newmont merger at one point years ago. People would be talking about it. And you'd think a merger to make the biggest miner in the world would grab some headlines. And I tell you, from a dramatic point of view, it just kind of fell flat. So in a weird way, I'm not entirely shocked. I'm not entirely surprised that it didn't work out. Again, it felt like there was no real impetus towards doing it other than to create the biggest mining company in the world and eclipse BHP, which in the face of it is kind of lame. Now, what I think the companies would argue, as well as many analysts, is there were a lot of synchronicities here. And hello and welcome to Northern Miner Podcast. My name is Adrian Pocobelli. There were a lot of synchronicities, as they like to say, in the merger and acquisition business, and to a certain degree, one could sympathize with that argument. For example, from a cultural point of view, both companies have somewhat edgy histories. We've heard of, bribery in Africa with Glencore. We've heard of Rio Tinto, of course, the famous Aboriginal site that was blown up in 2020. To a certain degree, that's not as crazy of a merger from a cultural perspective as, say, Teck and Glencore. Teck being a very proud-run family business, so to speak, whereas Glencore perhaps a little bit more, ruthless, for lack of a better term. So in that regard, maybe culturally speaking, not the worst fit, not an awkward fit, as again, the Glencore-Teck merger was, one could argue. Now, interestingly, when you look at the reasons, and we have a story here in mining.com, how Rio Glencore talks fell apart. This is by an editor at mining.com. Former Glencore chief executive Ivan Glasenberg spent years pursuing one prize above all others, a merger between his firm and Rio Tinto that could have reshaped global mining. Again, even that, what is the reason other than becoming the biggest? That ambition died quickly this week, with the latest talks collapsing in less than 24 hours as Rio announced it would no longer pursue a merger or any other business combination. The miner concluded it could not strike a deal that didn't deliver enough value for its shareholders. Glencore's response opened with who would be in charge, saying Rio Tinto wanted to retain both the chief executive and chair roles, before getting to what it considered the real issue, the Financial Review reported. The company said Rio's proposed ownership structure, quote, significantly undervalued Glencore's underlying relative value contribution to the combined group, even before any takeover premium. To be clear, leadership mattered to both sides. Ben Davis at RBC summed it up neatly, saying the talks were always going to be difficult, and that it was unclear what brought the two companies back together so quickly, or what pushed them apart just as fast. And that doesn't sound that far from my analysis here. And when you look at part of the reason being who got which roles, is that about shareholder value? Or is this about individuals? So we scroll down the article, the sticking point. Before talks began, the implied value split between the companies sat around 69-31 in Rio's favor. While Glencore pushed for something closer to 60-40, that gap sat at the heart of the dispute. From Glencore's perspective, the 69-31 split reflected a snapshot that flattered Rio, taken when coal prices were weak and iron ore prices were unusually strong, partly due to tensions between BHP and the Chinese government that constrained some iron ore flows. Glencore argued a 60-40 split better captured the long-term value of its portfolio, especially its 10 copper growth projects. If Rio wanted full control, including both chair and CEO roles, Glencore believed Rio should also pay a clear takeover premium. So I'm kind of back to, If this is purely about shareholders, should we be arguing over who has the roles? It kind of feeds into this notion that this was about individuals wanting to be able to say that they are leading the biggest mining company in the world. And admittedly, there are synchronicities. There are, I'm sure, benefits of them joining, but there's also, you might argue, that you can be too big. You can be too sprawling. And really, how much shareholder value was this going to create by joining? Again, I'm a bit at a loss as to what the real benefit here was. Now, the article ends, it's quite interesting, because this is where I would disagree. In the end, this was not a story about bruised egos or corporate pride. It was about timing, market cycles, and a fundamental disagreement over value. Until those numbers align, the mining industry's most tantalizing merger will remain just that, a deal that made strategic sense, but never added up. And if it made strategic sense, what's the problem? Again, I'm kind of back to if this was creating a whole bunch of shareholder value, it looks like they got 90% of the way there. And then you're kind of back to, well, what is the issue? And then you're back to motivations. And what was the concern around leadership that Rio felt it had to have both the chair and the CEO roles? That seems unusual. So an interesting development there. The merger that never was, BHP remaining at the top of the pecking order of the mining industry there. Now, speaking of conferences, the video of my talk at the Vancouver Resource Investment Conference is available on YouTube. That's on VRIC Media. And also on the Northern Miner, Henry Lazenby did an interview with me on the subject, and it is called Roundup Video, Lorion Silver Strike Bankrolled Ancient Athens, and we discussed that and many of the themes with Henry Lazenby, Western editor at the Northern Miner, there in Vancouver at the AME Roundup Conference. So if you are interested, that is where you find everything. So continuing on, and relating to the talk that I gave there, it's quite interesting what we're seeing right now. Of course, Iran is a big deal. I did an AI search on Grok, and it's quite interesting when you look at how much of China's oil is exported through the Strait of Hormuz, which Iran controls. It's 50%. 50% of China's daily oil is coming through the Strait of Hormuz, according to AI. So when one considers what is increasingly feeling like a resource war, and again, relating to that speech I gave in Vancouver, as we saw, between Athens and Sparta, the war wasn't about, attacking Athens, so to speak, or attacking Sparta. Those would simply be the last dominoes to fall once the trade routes had been controlled. And of course, Athens losing that war once they lost control of all the most important trade routes to them. And I feel like we're seeing the same thing going on here today. What is this war on Iran about? Perhaps it has something to do with Israel, maybe also. But it also seems to be about China, because if you're able to control the regime in Iran, then you control the Strait of Hormuz, and then you start to have China in a bit of a bind. Because otherwise, what is the urgency here? Is this about a nuclear weapon? Perhaps to a certain degree it is. Because if Iran gets a nuclear weapon, they become a lot harder to control, don't they, as we've seen with North Korea, who we don't hear much about anymore. Now, another flashpoint here is the Congo. And we have a story in the Financial Times. This is Leslie Hook and Camilla Hodgson. And here's the headline: U.S.-backed fund agrees to buy stake in Glencore's Democratic Republic of Congo mines. As it says, a U.S. government-backed mining investment fund has agreed to buy a 40% stake in Glencore's copper and cobalt projects in the Democratic Republic of Congo, the first big mining investment in the country since Washington struck a minerals deal with Kinshasa in December. Orion Critical Mineral Consortium and Glencore said on Tuesday they had reached a non-binding agreement on the terms of the multi-billion-dollar transaction and were planning to collaborate on additional projects across the African copper belt. The news came in the same week as senior Democratic Republic of Congo officials gather in Washington for a critical minerals ministerial meeting. The deal, if completed, would represent the largest U.S. investment in the African nation since Freeport-McMoRan sold a controlling stake in its Congolese mines to Chinese miner CMOC in 2016. And showing you just how important this is, U.S. Deputy Secretary of State Christopher Landau said the proposed transaction, quote, reflects the core objectives of the U.S.-DRC Strategic Partnership Agreement on Minerals. Quote, we look forward to continue close engagement with the DRC government to advance this transaction in a manner that delivers benefits for both our peoples and sets a positive example for future U.S. investment. Now, we don't really have any numbers here other than it's a multi-billion-dollar transaction. So, the Congo, again, as you're going to see, another trade route that was going to China that is now being interfered with, so to speak. And here's another headline. Virtus agrees to buy Congo cobalt miner amid U.S. pact. It's Bloomberg News via mining.com on February 6. A firm headed by veterans of the U.S. military and intelligence services has agreed to buy Chemaf SA, a troubled Congolese copper and cobalt producer that's become a focal point in Washington's efforts to shore up critical minerals supplies. Vitreous Minerals will pay an undisclosed sum for Chemaf and assume the firm's liabilities, including debt owed to Trafigura Group, Managing Director Phil Braun told Bloomberg News on Thursday. Now, don't forget, this is shortly after Robert Friedland visited with President Trump in the Oval Office. The Delaware-registered company plans capital investments of $750 million, funded by debt and equity, he said on the sidelines of an event with Congolese President Félix Tshisekedi at the U.S. Chamber of Commerce in Washington. So, Congo, another flashpoint, and here we have another story. This is Reuters via mining.com. U.S. challenges Chinese control in race for African minerals. And this is Reuters via mining.com on February 9th, yesterday. The U.S. is taking offtake deals and state-backed funding to compete in the short term with China in securing supplies of African copper, cobalt, and other critical minerals, diplomats, executives, and analysts said ahead of this week's Indaba. And of course, referring to Mining Indaba, the gigantic mining conference in South Africa. Washington's focus is on Zambia, Guinea, and Democratic Republic of Congo. Interesting, Zambia, of course, being in the Copper Belt, Guinea being where the enormous Simandou iron ore deposit is. Do you see a pattern here? Do you see what's going on? I would submit we are watching a resource war between the United States and China, where the U.S. is now playing catch-up and now is looking at all the choke points of the major trade routes to China. And of course, Guinea is supplying iron ore to China. They just had the ship arrive in the last few weeks. And what did we see with BHP and China and CMRG, the Association for Iron Ore Importers in China, in the last few months? We kept on hearing how the association wanted to be able to pay in renminbi. So it's all coming together here quite quickly. It's going to be interesting to see how the United States approaches Guinea. As you can see here, if you want to see the news behind the news, look at the resources, and we've been following it here for years. And clearly, we can attribute cause to events that are not commonly pointed out. Let's continue. Washington's focus is on Zambia, Guinea, and the Democratic Republic of Congo. The latter accounts for more than 70% of global cobalt supplies and produced some 3.3 million metric tons of copper in 2024. Instead of placing U.S. operators in high-risk countries, however, the U.S. is leaning towards offtake and other trading structures such as one it has with Mercuria and arrangements it has with Congolese state miner Jeka Mines to edge output into U.S.-aligned value chains dominated by Chinese refiners. Offtake is where a country or company secures rights to a share of a mine's output in exchange for financing or other support. So this seems to be the strategy for the most part. Like my impression with Iran, it's not that the U.S. wants to go in there and break everything. They would prefer to have a Venezuela-type situation where they just have a regime that's willing to work with them and basically do what they say, and in that regard be able to strangle 50% of Chinese oil imports at will. And I'd argue this is why you're starting to see, Chinese vessels in the region and this trilateral arrangement between Russia, China, and Iran. And I believe we have naval exercises coming up in mid-February with Russia, China, and Iran. So I think China's starting to change their strategy from a bit of a laissez-faire, you can do what you want, we're going to do what we want. I think it's pretty obvious that they realize what's at stake here. Returning to our article, offtake is where a country or company secures rights to a share of a mine's output in exchange for financing and other support. Quote, we're already seeing U.S. engagement reshape mineral flows out of Africa, said Thomas Scurfield, a senior analyst with nonprofit NRGI, ahead of the event in South Africa. Quote, the U.S. is putting money behind its rhetoric, but it remains to be seen whether it can compete with China's scale and speed, Scurfield added. Both Washington and Beijing are expected to seek new commitments at the Indaba mining event in Cape Town this week, with the U.S. sounding out officials on its mineral block. Central to the change, Cheka Mines is preparing to ship around 100,000 tons of its Tenke Fungurume copper allocation to U.S. buyers this year after winning broader marketing rights in a 2023 renegotiation with China's CMOC. It continues, the U.S. strategy stretches beyond copper. Xiao Wenhao, analyst at Shanghai Metals Market, said China's cobalt supply chain also faces risks as Congo's export restrictions collide with expanding U.S. DRC cooperation. Elsewhere, London-based Pinsansa ditched plans to build a rare earth refinery in Britain to process feedstock from its mine in Angola, shifting the project to the United States, citing stronger U.S. incentives and price guarantees. Quote, this is the U.S. deploying financial firepower rather than industrial presence, said Vincent Rouget, analyst at Control Risks. Quote, with offtake and trading channels, Washington can redirect Congolese copper to American buyers without taking on the political or operational risks of running mines in the DRC. Now, the only problem with these kind of deals is they are fragile. As one could imagine, say in Venezuela, sure, perhaps you are able, who knows how, one can imagine, to control elements of Venezuela's government. But it seems a tenuous hold. It's not the same as having people there, running it yourself, so to speak. And we have another headline, Congo to ship copper to Saudi Arabia, United Arab Emirates via U.S.-backed venture. This is Bloomberg News via mining.com. Again, any of these headlines could be the headline. We are spoiled here. As I said last week, the most exciting beat in the global news narrative. All the headlines are here. All the explanations are in this business. And it's Bloomberg News via mining.com. The Democratic Republic of Congo will ship copper to Saudi Arabia and the United Arab Emirates through a U.S.-backed partnership with Mercuria Energy Group, as the Trump administration looks to challenge China's dominance over the supply of key metals. Congo's state-owned miner Cheka Mines will provide 50,000 tons of copper cathode via its joint venture with Mercuria, the U.S. International Development Finance Corporation said on Wednesday. DFC, a U.S. government agency, is in talks to finance the new venture, which already agreed to ship 100,000 tons to the U.S. last month. And we have a quote from DFC Chief Executive Officer Ben Black, who said in an email, quote, growing cooperation between the U.S. and the DRC ensures valuable critical minerals are directed to the U.S. and our allies and strengthen the economic viability of our African partners. Mercuria declined to comment on the deal. Cheka Mines did not immediately respond to a request for comment on Wednesday. So we see what's going on. Now, interestingly, there is a story in Chinese from a website called the China Global South Project. Here is the head-turning headline. U.S. mining deals in the Democratic Republic of Congo alarm Chinese industry analysts. And this is on February 7th, 2026. And this is translated. The emerging minerals deal between the United States and the Democratic Republic of Congo are posing direct challenges to China's mineral domination in Africa, some Chinese media warned, urging stakeholders to rapidly look for alternative solutions such as diversifying from its heavy reliance on a single country or bringing foreign capitals into their investment. Zhen Wenhao, an analyst at Shanghai Metals Market, warned in a recent WeChat post that the U.S. and Congo's deals could have an immediate effect on China's mineral supply chains, especially cobalt, potentially resulting in what he characterized as a, quote, structural deficiency. Therefore, he said, the response must be quick, writing that China must do more to diversify its cobalt supply chain, such as by sourcing more from Indonesia. Quote, the primary alternative strategy currently is to accelerate market expansion in Indonesia by securing mining rights or establishing strategic partnerships with local mining companies to secure resources, said SMM analyst Zhao. And here's another one, quote, the DRC is being thrust to the center of a global contest over resources. Under Project Vault, Trump is using capital, loans, and political agreements to channel African minerals directly into American strategic stockpiles, reducing reliance on Chinese processing and supply chains. This is only the beginning of, quote, a new Cold War resources competition, the article added. We have been calling it a resource war for a few weeks now, so here it is. And we kind of knew this was happening, but now, whenever you see big moves happening on the global, chessboard, as Brzezinski would put it, you can start to look at it through this lens of trade routes and supply chains. And another story, again, this is the last 7 days. This is Creamer Media's Engineering News. Cobalt and copper sourced from DRC artisanal miners to be transported on Libido Corridor. And this is by Terence Cremier at engineeringnews.co.za. In a milestone for the Libido Atlantic Railway, which links the Democratic Republic of Congo to a deep water port in Angola, Entreprise Générale du Cobalt and Trafigura have agreed on the first delivery of copper and cobalt through the corridor. So it is happening quite fast here. And continuing on, there was a meeting in Washington that the Trump administration hosted. And this is CNBC on February 5th. The United States calls for trade bloc to counter China's leverage in critical minerals. And here it is. The U.S. on Wednesday unveiled new initiatives to mobilize allies into a preferential trade bloc for critical minerals, including coordinated price floors as Washington works to counter China's dominance in the market vital for technology and defense. The plans were discussed at a critical minerals ministerial in Washington this week that included representatives from 54 countries, the European Union, and senior Trump administration officials. Following the event, Washington announced that it had signed bilateral critical minerals agreements with 11 countries, building on 10 similar pacts inked over the past 5 months. Negotiations were also completed with an additional 17 nations. The goals of the agreements are to address pricing challenges, spur development, create fairer markets, and expand access to financing in the critical minerals sector. Secretary of State Marco Rubio, who hosted the ministerial, also announced the formation of the, quote, Forum on Resource Geostrategic Engagement, or FORGE, on Wednesday, a partnership to coordinate critical mineral policy and projects. Quote, we have a number of countries that have signed on to that, and many more that we hope will do so. The purpose of FORGE is to foster collaboration and to build a network of partners across the world, Rubio said. FORGE will complement an earlier effort between the U.S. and 9 partners known as Pax Silica. While Pax Silica centers on safeguarding AI-related supply chains, FORGE is designed as a broader platform to coordinate critical mineral policy, pricing, and project development. Again, as I always say here, it's just one big story, isn't it? Another headline, U.S. plans critical mineral price floors with Mexico, EU, and Japan. Another story, Canada defers spot and U.S. critical minerals pact, according to the Globe and Mail. And this is by a staff writer at northernminer.com. And so Canada won't immediately take part in the United States' plan to assemble allies into a preferential trade bloc for critical minerals. Foreign Affairs Minister Anita Anand told the Globe and Mail in an interview. Ottawa doesn't want to give away a key bargaining chip as it enters negotiations with Washington this year on the North American Free Trade Agreement, Anand said in a Thursday report. The deal, known north of the border as CUSMA, formerly NAFTA, is required for its scheduled 6-year review by July. So Canada holding out. And another headline, this is Reuters, exclusive, Italy, France, and Germany to lead EU critical materials stockpiling plan. Sources say, it's too bad they weren't listening to this program, years ago when we were saying stockpile. Metals are cheap. Now they're not so cheap. And with everybody stockpiling, as I was wondering last show, one imagines this is going to boost the price of all these metals. And final headlines, India in talks over critical minerals deals with Brazil, Canada, France, Netherlands, sources say, and that is today on Reuters.com. So this is all happening in the last 7 days, and we are just getting started. So a wonderful show for you. Coming up this episode, we have Karen Rees, president of the PDAC. She gives us a preview of the biggest mining conference in Canada and one of the biggest in the world. They are expanding it this year. And advice on how to navigate the convention, that is with Karen Rees. And also coming up on this week's episode, we have a spotlight with Kerem Usenmez, President and CEO of Volta Metals, who discusses the company's rare earth project in Ontario. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Kerem Usenmez, President and CEO of Volta Metals, for this week's Spotlight. Joining us today, I'm very pleased to welcome to the Northern Miner podcast for this week's Spotlight, Kerem Usenmez, President and CEO of Volta Metals. Kerem, welcome to the show.
Thank you. Thanks for having me. It's a pleasure.
It's wonderful to have you, Kerem. You're in a very topical area right now with rare earths. So for those people out there who are unfamiliar with Volta Metals, could you give us a little bit of background on the company and what you are working on?
Absolutely. Volta Metals is a critical mineral-focused exploration and development company in Ontario. All of our projects are in Ontario. We have Springer Rare Earth Deposit that's near Sudbury, Ontario, that we are advancing. It has a resource from 2012, but no work was done since the resource was done, and it was left open in all directions, and that's where we're advancing at this moment.
Now, rare earths include quite a few different kinds of elements. So what kind of rare earths do you have at the Springer Rare Earth Deposit? What are you looking at here?
So when we looked at it, it has basically 15 of the 17 rare earth oxides. And obviously it's varying throughout the drilling. So the deposit has over 1%, 1.15% total rare earth oxides, about 17 million with a cutoff grade of 0.9. So it's very, very generous, cutoff grade. But when you dive into it, it is light rare earth heavy, but about 5% of the heavies are included in the trio as well. So there's 5% heavy, about 95% lights. But what we are discovering as we are drilling further beyond the deposit is the heavy rare earths are increasing. We're about 9-10% at this moment. As we drill more, we're finding more and more. Of course, there are rare earths that are 30 cents a kilo. There are rare earths that are $3,000 a kilo. So what are those? The big four that Western modern world relies on. We have those in really, really good proportion within the total rare earths.
Okay, excellent. And we've actually reached a point in the news narrative where people are familiar with some of those rare earths. Can you tell us which rare earths in particular are maybe more highly concentrated or that you're excited about in the deposit in terms of what you think is there?
Absolutely. Look, the four big ones are neodymium and praseodymium on the light rare earths, and the heavies are terbium and dysprosium. Now, gadolinium, samarium are becoming more and more strategic as well, even though they're not the most expensive ones. They're hard to get. They're used in, all the important stuff from AI, EVs, etc., as well as defense applications. We also have lanthanum and cerium in really, really big portions. Cerium is extremely important. So we are very, very fortunate having this mineralization starting on surface and being open in all directions with paved road access. Look, I was telling some investors last week, when I have some investors on the property, I'm going to order pizza because there's pizza joints, there's Dairy Queen, there's Canadian Tire. They're all within 6 to 8 kilometers within the deposit with paved road all through from these locations.
Okay, excellent. And on your website, it also mentions gallium. Is that also in that deposit or is that somewhere else? Tell us about the gallium.
Actually, both projects have the gallium. But what's interesting with this deposit is when they drilled 2011 and did the resource in 2012, they never included the gallium, even though more than half of the boreholes they drilled hit high-grade, thick gallium intercepts, because at the time, nobody cared about gallium. It wasn't valuable. It's always a byproduct. So that caught my eye when we were doing the due diligence. Obviously, when we drilled, we're just getting the results from gallium. It's a different process completely to get the assays. So we got less than half of the borehole, the first borehole we drilled, and it came back with, again, super high grade, 117 meters of 77 grams per ton. Look, this is very, very high grade. The bauxite mineral, that's normally the highest grade mineral naturally found on Earth is around 50, 55 grams per ton. So it's very, very concentrated. It's very unusual for a rare earth deposit to have gallium. So we are really drilling and defining this. So we're hoping to have Canada's first gallium deposit in the very near future with all the drilling efforts we're doing. I want to touch base on the gallium. It's not a rare earth element, but it's very strategic. The reason is, apart from all the, premium magnets and so forth is being used, it is heavily going into the semiconductors, the chips, because of its higher response. Its melting point is like 30 or 33 degrees. It can actually melt in your hand. So it makes it very conductive. So it's super fast, a lot faster, 10 to 20 times faster than silicon chips. Therefore, now that we're seeing all the videos and everything else, it's going really fast. So gallium is becoming more, gallium nitrate is the main ingredient for those chips. The interesting part is 0% production, zero production in the US, negligible amounts from recycling in Canada. The 98% production is in China, and you cannot, there's super high controls now. Earlier last year, they put on, you can't take gallium out of China.
So it's pretty exciting. I mean, has there been any interest from government at all then in your project? Has anybody reached out, or do you talk to them and say, hey, we have something here you might be interested in? What kind of interest has there been from government?
There is, yeah. They are at the early stages of this interest level. Given we don't have a feasibility study, but we're advancing very quickly, it is definitely catching their eye. We are engaging with the both federal and Ontario government here in Canada. But what's interesting is we have an agreement with Idaho National Lab in the US. So that is a government entity. They actually built the first nuclear reactor. It's a large entity that does a lot of work, strategic work for the US government. It's all, highly qualified people there. They're extremely interested in the rare earths, but also gallium. So we have a partnership that they are looking at our deposit to see how we can process and take the gallium out, as well as the rare earths. So that's an ongoing process, a longer process, but they work with other major companies such as MP Materials, which is the only producer in North America of the rare earths, which led government to invest in that company because of the positive work that they did. So we'll see where it goes. But look, this is a deposit. We are literally sprinting to developing this, but it's getting bigger. So we're doing everything in parallel, and it's getting bigger and better by the day, to be honest, at this point.
It sounds pretty exciting. So help us out then to understand where this is going. Is there a roadmap? How do you see things playing out, say, in the next 6 months to 2 years, for example?
So this is not just an exploration project. It's becoming more of a development project. Now, what you do is you obviously define the deposit, do the technical studies, and then apply for permits for production. Permits, as we all know, require years of studies, the environmental, ESG, all that stuff before the government can actually look at it. So we know we're onto something special. We know we can get it into production quicker than any other rare earth project because of its location. So what we have done, even though we just acquired this last summer, 7 months ago, we have the surface right, so we drilled it, we're trying to define it. It's getting bigger and bigger and so forth. But what we have done is we started the baseline studies. So we started the environmental monitoring in 2025, within the couple months of acquiring it. Obviously, we engaged with the First Nations and the locals the first day we acquired it. So that relationship built really, really nicely, and they're really interested in this. So we have their full support. And then environmental studies are ongoing. So we are doing this to get ready for permitting production. We are defining this as well. We haven't hit the end of this in any direction, to be honest. We are still drilling. So the initial drilling we did in 2025, immediately after acquiring this, that is aiding us to update the resource. So the resource update is coming in the next 2 weeks. Within February, we're going to have the updated resource. But because all the boreholes left in mineralization, even though we drilled twice the amount of every borehole that we initially planned, we are updating the resource. Because they were left open, we started another drilling already. Why did I start the drilling? I want to understand how big this gets and how much more of the heavies and other elements, including gallium, we can find and define a gallium resource. So those are happening. While these are happening, we're obviously doing all the work for the environmental assessment and so forth for the production. One of the things you need to look at in rare earth projects is how can you process it? It looks good on paper. It looks good in the ground. It could be big. It could be this and that. But if you can't take the metal out, it's meaningless. It's, as we all know, it's useless. So the road access, the location, the power, everything is amazing. Mineralization is on surface. We got to do the work to get the metals out. So we're working with multiple labs, like I mentioned, Idaho National Lab, and a couple others, to look at different aspects of it, but to map out how we can separate and get the metals out and which ones are going to be out, etc. So that work has started last year as well. It's going very well. The initial liberation test that we did for the rare earths came back with better than expected. It's 78, almost 80% liberated from the rock. So how do we recover it is a different story. We started that in late October. I'm going to have those results in March. So that is going very well. But one of the good things is there's no radioactivity. There's no uranium. There's, negligible levels of thorium. So it's going to make permitting easy. Even transportation is going to be without a permit. So that's a good thing. What it allows us to do is we're looking at a very straightforward recovery process. The density difference between the ore and rock is great. The iron content is a lot greater. So that means that it's going to be, suitable for gravity, dense media separation, as well as magnetic separation. And then it's just straight flotation. So that's what we're looking at. How much are we going to recover? I'll have that answer in March. And then I think as it gets bigger, will be one of the top 10, if not top 5 deposits in North America.
It sounds like you have a lot of moving parts and it's moving fast. It's pretty exciting. As we wrap up here, Kerem, do you have a message for investors? So what do you want them to know about Volta Metals and the Springer Rare Earth Project?
Look, it is one of the 21 deposits in North America with a resource already, right? There's 177 rare earth projects, 21 has. We're around the 12, 13 ranked among the 21. It is getting bigger. So we're going to be in the top 10. And this drilling, even if it gets bigger, we're going to be in the top 5. So follow along. But like you said, we're going very fast because of the location and the easiness of this project development. We're going to apply for advanced exploration and get the bulk sampling later next year.
Okay, excellent. And final question, is this on the Venture or the Canadian Stock Exchange? Where can people find your listing?
We're listed on the Canadian Stock Exchange under the ticker VLTA without the O, Volta, and Frankfurt Stock Exchange as well as OTC Pink as well.
Kerem Usenmez, President and CEO of Volta Metals, thank you for joining us and sharing everything you're working on at the company.
Thank you very much.
Thank you once again to Volta Metals for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit voltametals.ca. Turning to the website, Tragedy in Mexico. Mexico says 5 missing staff from Canadian miner are dead. It's Bloomberg News via mining.com on February 9th, yesterday. Mexican authorities said at least 5 workers from Canada's Vizsla Silver Corporation have been found dead after 10 people were abducted from the company's Panuco project east of the Pacific Coast city of Mazatlan last month. The Attorney General's office said in a statement Monday that officials had also discovered 5 other bodies in the state and were working on identifying those individuals. An investigation into miners' disappearance is ongoing, the statement added. Vancouver-based Vizsla had earlier said that the families of the missing employees informed the company that their relatives had been found dead. Shares in the company fell 12% to close at its lowest since November in Toronto. The developer suspended operations at the project in January after reporting that 10 people had been taken from the site in Concordia in Mexico's Sinaloa state. Vizsla said information about the incident was limited and that it had engaged crisis management and security response teams. Vizsla is prepared to start construction at Panuco later this year and expects to start producing silver in the second half of 2027. The project has 31.4 million ounces of silver equivalent in proven reserves, according to the company. So your heart goes out to the victims and their families. As these metals rise in price, it seems that crime around these mines, as we've seen, increases. Continuing on, British Columbia appealing court ruling on Indigenous consultation for mining rights. It's by a staff writer at mining.com on February 9th. The British Columbia government is appealing a court decision requiring consultation with First Nations before granting mineral exploration rights on traditional territories. In an interview with the Vancouver Sun, Premier David Eby stated the December 2025 ruling, which favored the Gitxaala and Ihatasat First Nations, has created uncertainty around BC's Declaration on the Rights of Indigenous People, or DRIPA. The appeal to the Supreme Court of Canada, filed February 3rd, argues the appeals court misinterpreted DRIPA when ruling the Mineral Tenure Act violates consultation duties. The government contends the judgment risks elevating the United Nations Declaration on the Rights of Indigenous Peoples to, quote, quasi-constitutional status and creating, quote, a parallel universe of litigation. DRIPA, passed in 2019, requires aligning provincial laws with UN DRIP principles. Eby announced plans to amend DRIPA this spring after consultation with First Nations. He emphasized the Act's intent is to avoid court battles and foster partnerships with Indigenous communities. Gitxaala Chief Counselor Linda Innes rejected claims of confusion, stating her nation has always been clear about its position. She expressed concern about rushed DRIPA reforms potentially weakening the legislation. So that was a big ruling that came out, and so the province of British Columbia is going to appeal it. Continuing on, LME advances sustainable metal pricing plan, launches new portal. So this continues to move ahead. This is Reuters via mining.com on February 5th. The London Metal Exchange said on Thursday it is moving closer to launching official prices for sustainable metals produced to higher environmental and social standards and has rolled out a new website, LME Insight, together with its sister company, Commodity Pricing and Analysis Limited. LME Insight will publish metals market news, pricing data, and details of the methodology used to calculate sustainable metal premiums. And the exchange said in a statement, quote, the sustainable metal premium pricing methodology will be for LME-listed brands that meet verifiable, enhanced sustainability thresholds, evidence of which will be disclosed on LME Passport. If memory serves, they were a little reluctant at first, but now, here we are years later, and the London Metal Exchange is on board with green metal pricing. Quite interesting. Continuing on, Newmont wants Barrick to fix Nevada operations before IPO. This is Bloomberg News via mining.com on February 9th. Newmont wants Barrick Mining to address what it says is underperformance at their joint venture mining operations in Nevada before its partner proceeds with an initial public offering of its North American assets. The world's top gold miner has been critical of Barrick's management in Nevada after years of production declines and rising costs, according to people familiar with the matter. Newmont, which has shown interest in acquiring the Canadian producer's Nevada assets in the past, believes the IPO needs its approval, said the people who asked not to be named as the matter is private. Newmont's primary concern is Nevada Gold Mines' joint venture, quote, which has suffered a degradation in performance and subsequent asset value over the past 6 years, the company said in a statement. Newmont's primary concern is the Nevada Gold Mines joint venture, quote, which has suffered a degradation in performance and subsequent asset value over the past 6 years, the company said Monday in a statement. Quote, Newmont is taking appropriate steps to address these issues with Barrick with the goal of reversing this decline in performance and ensuring these assets generate the value they are capable of delivering. It said, any transaction involving the Nevada operations, quote, must respect the protections in the joint venture agreements, including the, quote, transfer restriction requirements, the statement added. So it sounds like there is quite a bit of friction there between Barrick and Newmont in Nevada. Quite interesting. Continuing on, copper price surge is masking mining woes in top producer Chile. It's Bloomberg News via mining.com, and there is footage of Robert Friedland on X, where he is describing Chile's copper situation as not that great. Here is the story. A modest increase in Chilean copper export values last month appears to be masking declining output as the top producing nation grapples with falling grades and underperforming mines. January's shipment of $4.5 billion represents a 7.9% increase on year-earlier levels, according to central bank data released Monday, but average prices surged 34% over that span. If confirmed later this month, lower production in a country that accounts for a quarter of the world's mined copper would underscore global supply setbacks that helped push prices to a series of records in January before easing in early February. Output in Chile declined on an annual basis in each of the last 5 months of 2025. And they have been struggling there, inserting new CEOs, and nothing seems to be working. Continuing on, ports for Australia's Pilbara iron ore region closed due to cyclone. This is Reuters via mining.com. Ports in Western Australia, including the world's biggest iron ore export hub, were closed on Saturday as a tropical cyclone developed off the coasts from the vast Pilbara iron ore region, the port's operator said. Tropical Cyclone Mitchell, a Category 2 storm, sparked the closure of Port Hedland, as well as ports of Ashburton, Cape Preston West, Dampier, and Varanus Island, Pilbara ports said in an online alert. So, interesting weather event there in Australia as we continue to follow the iron ore story, which still seems unresolved, doesn't it, between BHP and China. Continuing on, Mozambique pushing to keep South 32 aluminum smelter open. Minister says, this is Reuters via mining.com. Mozambique's government is doing, quote, everything that is required to make sure that South 32's Mozal aluminum smelter stays open, Mineral Resources and Energy Minister Estevão Pale said on Monday. The minister was speaking to reporters on the sidelines of a conference in Cape Town, South Africa. Australia's South 32 said in December that it would place the Mozal plant under care and maintenance by March, incurring a $60 million one-off cost after failing to secure a power deal with the government. So we are seeing this over and over where smelters want subsidies to run their high-energy consuming operations, and nowhere more so, probably, than in the aluminum sector. Continuing on, an interesting headline, Mexico seeks voluntary return of mining concessions not being used for production. And that is Reuters via mining.com. Mexico's President Claudia Sheinbaum said on Monday her government was seeking the voluntary return of more than 200 mining concessions of projects that are not being used to produce any output. So governments are becoming hyper-aware of their resources and resource potential in the country. Another headline, silver price whipsaws again as thin liquidity fuels wild swings. And this is Bloomberg News via mining.com on February 6th. Silver lurched between losses and gains, dropping nearly 10% before snapping back as a lack of liquidity led to wild swings in a market struggling to find a floor. Spot silver was up nearly 10% to almost $78 an ounce by late afternoon in New York on Friday, having earlier tumbled towards $64. That followed a 20% decline in the previous session that wiped out all of the metal's gains from a spectacular rally last month. Gold also advanced after an earlier retreat. And we have another silver headline, and this got some traction on social media. Chinese trader who made $3 billion on gold bets big against silver. And that is Bloomberg News via mining.com on February 5th. A billionaire Chinese trader who made his name riding gold's record-breaking rally has turned his sights to silver's breakneck surge, with a bet on the metal's collapse now worth almost $300 million. Bian Jiming, who avoids the limelight and spends much of his time in Gibraltar, has made nearly $3 billion from bullish bets on Shanghai Futures Exchange gold contracts since early 2022. He has now built the bourse's largest net short position in silver, according to Bloomberg analysis of exchange data and people with knowledge of the investments. They asked not to be named as the information is not public. So, more volatility in the silver market. Continuing on, China Central Bank keeps buying gold as bull run hits brakes. This is Bloomberg News via mining.com on February 8th, Sunday. China's central bank extended its gold buying streak to 15 months, underscoring resilient official demand as bullion's record-breaking rally was hit by a sharp market sell-off late last month. Bullion held by the People's Bank of China rose by 40,000 troy ounces last month, according to data released on Saturday. The central bank began its latest round of buying the precious metal in November 2024. So China keeps buying gold even at $5,000 an ounce. Finally, scientists still diving at 90 says deep-sea mining won't succeed. This is Bloomberg News via mining.com. Plans to extract metals from the deep seabed are too complex and costly to succeed, according to one of the world's most experienced marine biologists. Quote, going up in space is relatively easy compared to going deep into the ocean, said Sylvia Earle, 90, an oceanographer and previously the first woman to serve as chief scientist of the National Oceanographic and Atmospheric Administration. Quote, it's an illusion because of the actual cost of mobilizing what it takes to operate in those depths. And scrolling down, she also said, quote, I've had a fair amount of experience building equipment, working with engineers to explore the ocean, but not exploit it, and the difficulties of working in salt water at depth. You can't overestimate the issues, she said in an interview Thursday in Singapore. So very interesting comments. We have not heard that yet. Those are your news stories. Now, let's take a look at metal prices. Turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.18%. That is down 0.11% on the week. The UK 10-year gilt is yielding 4.5%. That is down 0.01% on the week. Italy's 10-year bond is yielding 3.44%. That is down 0.06% on the week. Germany's 10-year Bund is yielding 2.83%. That is down 0.06% on the week. Japan's 10-year bond is yielding 2.23%. That is down 0.03% on the week. So no huge move following the elections on Sunday. And China's 10-year bond is yielding 1.8%. That is 0.01% lower on the week. So it seems that bond yields are down, likely because of the report of job losses and recession fears in the United States. Turning to precious metals, gold is back above $5,000, trading at $5,069.70 per ounce. That is $157 higher than last week, so recovering. Silver is lower at $81.78 per ounce. That is $4 lower than last week. Platinum is trading at $2,117.60 per ounce, and that is $9 lower than last week. And palladium is trading at $1,743 even per ounce, and that is $51 higher than last week. So gold and palladium higher, silver and platinum lower. Turning to industrial metals, copper is trading at $5.95 per pound. That is 14 cents higher than last week. Iron ore is trading at $100.11 per metric ton. That is $5 lower than last week. So big drop in the gigantic iron ore market. Aluminum is trading at $1.42 per pound. That is 3 cents higher than last week. Lead is unchanged at 90 cents per pound. Nickel is higher at $7.95 per pound. That is 23 cents higher than last week. Tin is lower at $21.19 per pound. That is $2 lower on the week. Cobalt is unchanged at $25.53 per pound. Lithium is lower at $19.57 per kilogram. That is $4 lower than last week. Uranium is trading at $85.25 per pound. That is $14 lower than last week. And zinc is higher at $1.54 per pound. That is 3 cents higher on the week. So a mixed bag in the metals. On one hand, it sounds like there are concerns around a recession, but then perhaps the individual supply-demand stories of each metal is becoming a factor, and also how much that metal has run up until this point. So a whole bunch of factors seem to be colliding here, and those are your metal prices. Coming up, I'm very pleased to welcome for the first time to the Northern Miner Podcast, Karen Rees, president of the PDAC, the Prospectors and Developers Association of Canada. They have their gigantic conference coming up on March 1st to 4th in Toronto, and one of the biggest events in the entire global mining calendar. I've been to it many times, but not since COVID. So I look forward to going there this year. We'll have a podcast booth. So if you do attend, do listen to this interview with Karen Rees, where she gives advice on how to approach the conference because it is so large. So lots to look forward to in this interview with Karen Rees. I hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome to the Northern Miner podcast, Karen Rees, president of the PDAC. Karen, welcome to the show.
Adrian, good morning. Thank you very much for having me.
It's wonderful to have you, Karen. It's such an exciting time in the mining industry, and we've already had a few big conferences in Vancouver, and of course, the very big one, at least in Canada, in March coming up, the PDAC conference. How are things going? How are you feeling about it 3 weeks before showtime?
In a word, I'd say excited. The convention, as many people know, is organized by a team of professionals on PDAC staff that is complemented by work of the various committees that feed into the programming for the convention. But I think, as you alluded to earlier, being at some of the conferences at the top of the year here, it's a very buoyant atmosphere, I would say, very full of optimism. And I look forward to watching that continue to play out through our convention in March.
Indeed, when one sees one's stock portfolio rising, it tends to help the animal spirits, so to speak. So just before we get more into the conference, tell us a little bit about yourself, Karen. How did you become president of the PDAC? How did you get involved?
Well, if you'll indulge me, I'll step back a bit before that to say that I started in mineral exploration in the late 80s. And I worked for a couple of majors, but primarily in the junior exploration space and entirely in Canada, which is maybe a bit unusual for a lot of people. But anyway, that's where I was. I worked as a field geologist, got through into sort of management in a junior, which means, you're wearing a lot of different hats. And at a certain point in my career, I guess it was about 14 years ago or so, I felt like it was a good time for me to start giving back to the community that I had been part of. And speaking to a few people, one in particular encouraged me to become a volunteer for the Prospectors and Developers Association of Canada, PDAC, in the our Human Resource Development Committee and working with our student and early career program. That evolved. I got involved with another program under that committee work and eventually was encouraged to put my name in for the board. So I was elected by the members in 2018 to the board. And within that group, then further encouraged to put my name in for the executive committee that led to the track to become president. And that we followed through in March of 2025. It's a role that I hold with great honor to serve the association this way, 2-year term, and very happy to be speaking on behalf of the PDAC in this role.
Well, again, we're excited to have you here, Karen. And so how is this year maybe different from other years? Of course, natural resources has been bubbling to the top of the news narrative over the last few years, but especially in the last year, it's kind of hit a whole new level of attention. I'd almost say since April, with the rare earth export curbs out of China, it kind of hit center stage here. What's your impression of how things might be different at PDAC? I mean, will it be different? Is it basically the same setup? I mean, there's a lot of new people who are maybe attending. How are things different this year? What can they expect?
Well, I think you bring up a good point. I've actually been going since, I think, the late 90s, and I feel like every year is different. Obviously different things going on in the world. This year, last year, going into 2026, higher commodity prices. And as of a year ago, a very strong focus, obviously, with critical minerals and talking about here in Canada, what we can do But for the convention itself, for those who don't know, and this will be new, it's the largest show that we've ever had in that we are expanding to the full capacity of event space in both the north and the south building of the Metro Toronto Convention Centre, MTCC. And that includes a total of 1,300 booth spaces, in addition to all of the actual programming that we have in the meeting room spaces.
Incredible. Because it's already a gigantic conference for those that have attended, somewhere in the neighborhood of, correct me if I'm wrong, maybe 25,000 people show up to this thing. So, I mean, this is quite something if it's basically expanding, as you're saying. Now, usually there's a sponsor country or there's certain themes. Is there anything else you can tell us? Do you know anything, say, about the keynotes or some people of note that maybe are speaking? What more can you tell us about the conference?
Well, I'll tell you generally, we have 100 hours of programming delivered by 700 speakers in our meeting event space. So I won't speak about any particular one thing. And themes, it's very broad based, but specific in individual programming things. And things that will be familiar to people are the capital markets program, sustainability program, the keynote speakers, new innovations, masterclass series, Indigenous programming, the student early career program, the entire technical program, and out on the show floor, seeing those 1,300 exhibitors. I should also add, too, that over the years, because PDAC, the convention, is largely about making connections and networking, every year we have continued to expand our opportunities to make those personal connections with people. So we've added some more casual events, coffee connections, a few of our evening events that are hosted at the Royal York Hotel, where people can kind of get out of their business attire and relax and just, connect on a human level. Because really, relationships at PDAC, it's about business, but I believe good business relationships are made by good human connections.
Indeed, they are. And you bring up memories of the media party, Karen, and I'm sure you remember the media party. We're still wishing we still had that media party. Any hope for a future media party?
Well, that's something that I actually don't recall myself, but
maybe it was only media
sounds
people.
like something I need to investigate.
Indeed, this is where they would make the announcement. It was almost semi-comical where they'd make the announcement every year of extending the deadline of the flow-through share financing for one more year. It was it was a kind of almost a pre-party and media was invited. Not to get off topic here, Karen. Now, oftentimes PDAC has certain advocacy, things that they are trying to accomplish, not just during the conference, but throughout the entire year. In 2026, does the PDAC have a message for government that they want to convey?
Well, we certainly do. And yes, again, outside of the convention where there are common themes, concepts, the work of the association continues on throughout the year and advocating with federal government and alongside our provincial and territorial partners. We do have key messages, and those are, we're very encouraged by the level of investment flowing into Canada's mineral sector, but we want to continue to attract investment at current levels, and that depends on policy certainty, fiscal competitiveness, and long-term investor confidence. You alluded to it with the media party reference, the mineral exploration tax credit. And that has been something that PDAC talks about every year. We were fortunate to have a long-term renewal. And then with change of government, we went back to a 1 year, and we're presently in a 2-year renewal. It's now due to expire in March 2027. That's just down the road. What we would like to advocate for is to have fiscal incentives like the METC and the new critical minerals exploration tax credit put into a more permanent fiscal set of tools so that investors or potential investors know that the money that they're putting into companies can actually allow the companies to carry out multi-year exploration programs so that we can, we're starting with the showing, we're following through with systematic exploration, and those lead to the discoveries that are an integral part of the pipeline for our production profile in Canada.
The market likes certainty, as they say. So indeed, that seems like it would be helpful. Now, just to clarify, you mentioned a little bit about, say, the North Building. There's a South Building as well. I imagine there's going to be quite a few new people coming. Can you kind of give us a lay of the land, so to speak? It's a pretty big layout here. So how should people conceptualize this conference in their mind?
A little word of advice, along with conceptualizing the space, is wear comfortable shoes. It's very easy over the course of one convention day to get in the 25,000 to 30,000 steps. The MTCC, located on Front Street, the North Building, does have an overhead walkway. We will have our Trade Show North up there, our Northern Lights Hub, I believe it is called. And so there's a couple of levels in the North Building. In the South Building, you have the ground level, and then going down to registration, and then 2 levels of meeting spaces, exhibit space, and where all of the talks take place. It's all very doable, and we also have accessibility supports in for people who need that. There is information available on our website for that. And I would say also, in addition to packing comfortable clothing and footwear, visiting our website, pdac.ca, to get the schedule at a glance. You can add sessions of interest to your personal calendar and populate a very full and, I'm sure, what would be satisfying experience at the convention.
Okay, excellent. And say for, newer entrants into the space, how should they approach it? I mean, I remember there being the company area, then there's the place where there's more equipment and whatnot, right? There were different kind of tiers, so to speak, or at least it seemed to me there's different kinds of access that maybe you pay more for access to the equipment, showroom, so to speak.
Right.
How should they approach it?
So, I mean, I would advocate for an all access pass to get you into absolutely everything, including our network events. When you mentioned the company section, that is referred to as the Investors Exchange, and then the sort of service providers, the academia, the regional and country geological surveys, those are in the Trade Show North and the Trade Show South. Day passes are available. The information is available on our website. Unfortunately, our early bird registration deadline has passed. That was February 6th. We do price our convention as very affordable compared to many of the others. And honestly, for the 4 full days of programming, including evening events, it's well worth people's investment in this opportunity.
Speaking of new entrants, there's also going to be students, and you actually have experience with, say, students and early career type initiatives. What can students expect? Is there certain programming for students? What's going on there?
So yeah, we expanded that to be student and early career program over the last number of years. And it's also more than, let's say, geoscience and mining students. Any student early career in those disciplines, business, marketing, law, accounting, environmental, social, sustainability can attend the Student and Early Career Program. There is a reduced entrance rate for students. Some of the programs that we have is, first off, I forget the date. I think it could be February 19th, but the PDAC is putting on a membership webinar to explain to people, like kind of a break the ice, how do you navigate around convention? Because it can be overwhelming. On the convention floor, we do have a how to navigate the PDAC convention. We have 20-minute mentoring that students and early career can sign up for. That takes place for the 4 days of the convention. We have guided tours to student-friendly booths. We have student industry mixer, and that's a room full of 1,000 people, students and companies who just want to connect with the next talent of our minerals industry. We convene a panel of experts in various fields, and it's a great Q&A session so that people coming into our industry, they are exposed to the variety of disciplines that you can work in our industry, and it's been very successful.
And I don't know if you can talk about it, but are you expecting, maybe you can speak in generalizations or more specifically, are you expecting politicians? What kind of representation from government are you expecting?
We have invites out to governments. I know that in the regional provinces and territories, I've certainly run into folks in the last 6 months or so who said they are coming to our convention because they wouldn't miss it. We haven't had any confirmation yet about specific individuals attending, but we certainly hope they're there. This is a great time for all of our government representatives to be out with the minerals industry folks.
For those that maybe, if you're newer and you haven't heard of the PDAC, I believe Stephen Harper, I remember, actually appeared. It's a pretty important event in the mining calendar globally, but especially in Canada. Is there anything we haven't discussed that you think we should discuss here about the conference and what's happening here at the beginning of March in Toronto?
I'll just leave you with the message that it's going to be a great event, and certainly for anyone who has the ability to be in downtown Toronto for March 1st to 4th, I think, it's a great event, whether you're in the industry or not. I mean, there's a platform there for possibly retail investors looking for some interesting things to put their money into. But it's a great learning event for, again, maybe people not in our business, but there's so much programming that is going to be relevant to many folks, given how important the minerals industry is to our everyday lives.
Well put, and I'm excited to go back. We will be back this year with a podcast booth and also with some video. It's going to be an exciting conference. Thanks for coming on the program, Karen. We're looking forward at the Northern Miner to joining you there. Karen Rees, president of the PDAC, thank you for joining us on this week's podcast.
Thank you very much, Adrian, and I look forward to meeting you in person on the podcast floor or wherever you're enjoying the vibe of the convention.
Thank you once again to Volta Metals for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit voltametals.ca. And also thank you to Karen Rees for appearing on this week's podcast and giving us a preview of the biggest event in the Canadian mining calendar, the PDAC, Prospectors Developers Association of Canada Conference. And also thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.